Hey traders, it's John Fortune here with this week's weekly Forex forecast for the 1st of April to the 5th of April 2019. As always, we're going to start off by looking at the US dollar index and oil before running through a number of markets, looking at the key levels of support and resistance in the process. And we're also going to be highlighting some of the targets that we're going to be looking for in the coming week and also in the weeks ahead. So let's jump over to the charts and see where the money is this week. As always, starting with the US dollar index. Now, going into this week, we traded into this key area of resistance highlighted in the video last week at 97.29. We are viewing this still as bearish, although it is in a range as we highlighted last week. So we are slightly bearish to neutral overall on the US dollar index. Going into this week, as we sit at the 97.29, this is an area we're going to start to look for declines in the US dollar index. Just to note, we have not had any declines as of yet. We have had no reversal patterns in this area. We are just testing this and we're just sitting at this area. But if we get those reversal patterns in this area next week, we're going to be looking for declines in the US dollar index down towards the next key area of support and the range bottom here at the 95.99. Now, going into next week, because we are in a range in the dollar index, we are not going to have a particularly strong bias one way or the other because this thing could just chop around. So we're going to be trading the individual markets on their own merit without a very strong bias in the dollar one way or the other. So the next market we're going to look at is crude oil. Now, last week we highlighted that the near-term uptrend in crude oil was still intact. We were looking for further advances up towards the 61.25. We did get a bit of a sideways correction, but we have started to rally now up towards the target, the 61.25. So very simply put, once again, looking to trade in the direction of this near-term trend. Any pullback in this area in crude oil, potentially a pullback and a retest of broken resistance, turning support once again at the 57.97. Any pullback in this area and potentially another retest, this is going to provide an opportunity to look for bullish formations and patterns. And if we get this pullback and we get the right kind of bullish formations and patterns in this area, we are once again going to be looking at initiating longs in crude oil up towards the first target and the next key area of resistance to the upside, 61.25. And if we can get a breakthrough here, probably after a bit of profit taking like we had when we took out this target over here, we bounced back and then we started to rally again. If we can break through here, we're going to be looking up towards the next key area of resistance to the upside and target 2 at the 62.70. So the first currency pair we're going to look at is the euro dollar. Now we start the week having traded into this key area of support and what could be starting to form a range bottom at the 1.12410. This was an area highlighted last week that we were looking for potential bullish formations and patterns. And we are currently still treating this as a correction, or at the very least as part of a range. We do not yet have any bullish reversal patterns in this area, so we are sitting patiently as it actually breaks and retests the underside. What we would like to see going into next week, if we can get the right kind of bullish formations and patterns in this area, we're going to start to look for potential longs in the euro dollar, and we're going to be looking back up to the range top and the next key area of resistance to the upside at the 1.1419. So the next market we're going to look at is pound dollar. Now we start the week having tested a previous key area of support highlighted in last week's video at the 1.30560. We are actually currently sitting below this, but we are also above the 1.2960. So shorts in this area are not something we're currently looking at. You could pretty much think of it a little bit almost like a range breakout type scenario. But what we would like to see going into next week, although it could be played to the downside below the 1.2960, what we would prefer to see going into next week, we are looking for further advances as a preference in the pound dollar. So very simply put, going into next week, if we can get the right kind of bullish formations and patterns in this area and really a break back above the 1.30560. This is going to be a place where we're going to start to look for bullish formations and patterns, and we're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set at the 1.3364. And if we can get a breakthrough here, we're going to be looking up towards the next key area of resistance to the upside and target 2 at the 1.3452. So the next market we're going to look at is US dollar Japanese yen. Now last week we were correcting and we were looking for further declines to the downside in US dollar Japanese yen last week. We had a bit of a nothing week, a bit of a corrective week. We had inside weeks in a number of the currencies, and going into this week we are still looking for further declines in the US dollar yen, just viewing this simply as a correction, as a chance to start to look for bearish formations and patterns. And if we get the right kind of bearish formations and patterns in this area, and each Monday we train our clients how to do this live so they can do this themselves, they can read these charts exactly what they're doing at each given time. And if we get those reversal patterns in this area, we're going to start to look at initiating shorts in the US dollar yen down towards the next key of support to the downside and the target set at the 109.09. So next market we're going to look at is Aussie dollar. Now last week we highlighted the 0.71380 as an area to start to look for bearish formations and patterns. We did get a bounce from this area, although like a number of markets last week there was a lack of volatility in the Aussie dollar. We didn't really go very far, we just kind of corrected. Very simply put, we are still looking for further declines towards the target outlined last week at 0.70270 as the high probability play. Any pullback in this area, and preferably if we can get one more retest for anybody not already involved, although we have tested it already once, twice, so the more times we test this, the more likely it is to start to decline without retesting. But if we can get a pullback, any pullback in this area, and especially another retest of the 0.7138, this is going to give us another opportunity to start to look for bearish formations and patterns once again. And we're going to be looking at initiating shorts down towards the target highlighted in last week's video, and the next key of support to the downside at the 0.7027. So the next market we're going to look at is New Zealand dollar. Now we start the week below a key area of broken support from the past, looking to potentially turn resistance at 0.6870. We had this decline last week as the Royal Bank of New Zealand took a more dovish tone, that is to say they started to open the door towards potential rate cuts, and we had this big sell-off in the New Zealand dollar and generally in the New Zealand pairs. Very simply put, going into this week we are looking for further declines in the New Zealand dollar, partly because of this and also because of the technicals. If we can get a pullback, and preferably, as always, if we can get a pullback and a retest of broken support turning resistance, as this gives us a better risk to reward ratio, this is an area we're going to start to look for bearish formations and patterns. And if we get the right kind of bearish formations and patterns in this area, we're going to be looking at initiating shorts down towards the next key of support to the downside in the range bottom at a 0.6745. So the next market we're going to look at is US dollar Swiss franc. Now last week we were looking further declines to the downside in the US dollar Swiss franc, and we had another currency pair which just kind of corrected, didn't do very much. We are treating this pullback as a correction, and so very simply put, we're looking for further declines in the US dollar Swiss franc. If we can get a pullback, and any continued pullback gives us better risk to reward, and potentially if we can get a retest of broken support turning resistance to the 1.0011, this is going to provide a great place to start to look for bearish formations and patterns. And we're going to be looking at initiating shorts in the US dollar Swiss franc down towards the next key of support to the downside and the target set, the 0.9877. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2, the 0.9846. So the next market you're going to look at is US dollar CAD. Now US dollar CAD is a classic example over the last 2 weeks why we've been looking at trading these on their own merit, with the US dollar being in somewhat of a range, or at least a corrective price action taking place. 2 weeks ago we had the US dollar index decline to the downside, and we had the US dollar CAD actually closing strong. And last week we actually had the US dollar closing fairly bullish, and the US dollar CAD actually closed to the downside. So stronger US dollar index, weaker dollar against the CAD. So it's kind of been doing the inverse to the US dollar over the last couple of weeks. And very simply put, it is quite choppy going into this week, but we are still technically structured to the upside. Any pullback in this area, and preferably if we can get a retest of broken resistance turning support once again at the 1.33060, this is going to be an area we're going to start to look for potential bullish formations and patterns. And if we get the right kind of bullish formations and patterns in this area, we're going to be looking at initiating longs up towards the next key of resistance to the upside and the target set, the 1.3467. And if we can get a break through here, we're going to be looking up towards the next key of resistance to the upside and target 2, at the 1.3564. Last but not least, we have gold. Now we start the week having declined from the top of the range here at the 1320.67. When we bounced at the bottom of the range at the 1284.10, we were looking for further advances up towards the 1320.67. And last week we traded into the target in the range top here at the 1320.67, and we were looking for further declines. We did bounce from here. We took out the midpoint target as set from last week, and we've started to make our way all the way back down to the range bottom and support at the 1284.10. So very simply put, going into this week, we're going to be looking for one final push down into the key area of support at the 1284.10. This is going to be an area, just as we looked at over here, that we're going to start to look for bullish formations and patterns. And if we get the right kind of setups in this area, we're going to be looking at initiating longs in gold back up to the next key area resistance to the upside in the range top at the 1320.67. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everyone who does that on a regular basis, and a big thank you to everyone who comments on the channel as well. I want to thank everybody who has subscribed to the channel so far, and I want to wish you all a fantastic week next week, and I hope you all have a nice weekend. The only thing left for me to say is take care and don't forget to trade safely.